Hello, investors. It's Dr. Marcia from Bookworm Investment Club. I am the creator and the founder of Bookworm, and it's where we teach women how to invest in the stock market, build a profitable stock portfolio, manage that portfolio, and eventually be able to use that portfolio as your paycheck. And today we're going to talk about the saying, sell in May and go away. And if you're an investor for a number of years, you have undoubtedly heard that saying. So what does it mean? And should we even pay attention to it? Let's chat. Anytime I have or want the definition or an explanation about anything investing, I go to Investopedia. And Investopedia is the encyclopedia of investing. The saying, sell in May and go away, is based on the fact that historically some stocks will underperform during the time period of May through October. And believe it or not, some investors will use that strategy and they will sell their stocks in May and then buy them again in November. So why does this happen? Why do you see a decrease in the return of some stocks during this time period? Well, when the weather gets warmer, people go on vacation. And the folks are not that active in the market because you're going to need buyers and sellers in the market. And if people are on vacation and enjoying themselves, you're not going to have as much buying and selling in the market. This year, because we have been cooped up for the past year in the house, it just might come true. So, there are some experts that do suggest, however, that there's an alternative to selling your stocks, and that includes sector rotation. In other words, buying stocks that are known as defensive stocks from May through October. So what's a defensive stock? Well, defensive stocks or a defensive sector are sectors like the utility sectors, which includes gas, water, and electric companies. Another defensive sector is the consumer staple sectors, and these include companies, the food companies, beverage companies, companies that make hygiene products, tobacco, and alcohol. Another defensive sector is the healthcare sector, and these are companies that make drugs, medical equipment, provide medical services. So these are the type of companies that they suggest that you sort of rotate in and buy during this time period. So how do we use this information? Do we even care about this sell in May and go away? Well, as long-term investors, and that's who we are, we buy and hold our companies as long as they're making us money. So when we get to this period, this May through October period, and we see a lower return in the stock markets or a lower return in our portfolio, we just simply say, oh, this is just the sell in May and go away phenomena. And you know what we do? We go out and we enjoy the summer, period. And even though summer is coming, we still have our investment club. We still have our meetings once a month on the second Thursday, and we're still building our stock portfolios. To find more information about that, go to bookworminvestmentclub.com and hit where it says Investment Club, get the information, and consider joining us to help you build your stock portfolio. In the meantime, keep investing in small steps. We'll talk soon. Bye.